Yo. I'm gonna get the link out real quick. Let's move this here. What's that? That's how you feel? Perfect. All right. So if you guys get in here, you got a few minutes. Let me full screen this while I'm at it. Move this over. Yo, what's good? How you doing, man? So I'm waiting for Shakima to get in here, and then we are going to get started. Solid, bro. Same. Great trading day for me too. Waiting for Shakima to get in here. Give them a few minutes. So today we are going to be talking about pretty much everything. The final one of the final, actually the final piece, really, to everything that I've been additional that I've been teaching you guys. That really I believe are going to be the keys for profitability. And we have there are like 30 more seconds to hop in here. See if she sees the notification. And just turn this down. All right. So I'm just gonna get started. She can if she sees this in time, she can grab the replay or whatever she missed. So there's two things that matter in trading at all. And to break it down pretty simply, it's time and price, right? You have to have proper price action and you have to be trading the assets at the right time. And we'll be 100% focused on the ICT kill zones, how it correlates with time and price, and what times the algorithm actually runs. So once again, if you didn't hear that, you just got in here. The only two things that matter are time and price, right? Time of day that you're actually trading and price action. So I covered a little bit the other day that the um, the um, the price portion of this you have to have down in order to trade properly, right? And trade accurately at that. So what you're going to do is you're going to which vendor was this? Let me go to my indicators. If you don't already have this, you're going to go and like this. You can use either one of these. I like Bryce's better personally. Take that out. With this, you won't need Asian range. You won't need that either. You'll just need, if you want it, DRIDRE if you wanted to use that. If not, that's fine. It's just optional for more confluence. You're going to have some type of session indicator, but if you don't want that session indicator, you can just go with the kill zones if you want to. But for high of the day and things like that, you're going to want to have this happening. And if you don't, like I said, want this, you can just get a sessions indicator and be able to, do that. So let me real quick save this as default so that when I put it back, you guys can kind of see what it looks like. So this is the other kill zone option. It's essentially the same thing. It's just they essentially made the same indicator. Bryce is a little bit this is KZ boxes is a little bit different, but it's the same. It looks different, but it's the same. So going back, I use Bryce's, and the settings are a bit different. Actually, no, I did not use Bryce's. That's a lie. I switched from Bryce's. My bad. I use um I use you can how do you say this? You can use either one, and both of these are really good. I started off using Bryce's. There's absolutely nothing wrong with his. Then I use Leon Holo's. Leon's so how do you say his name? Leon's. I'm tired and haven't had enough coffee. Anyways, this is going to add in the price. Once you have that indicator, you're going to should look something like this. And London kill zone is between 1 and 5. New York is between 7 and 10. And then Asian range, I put between 8:15 and midnight because midnight is London open. So that's when Asian range it technically ends, right? And you also have a London closed kill zone if you want that, right? I put field box middle, box height 2, and then daily high, daily low. I kept those off, makes the chart a bit messy. And then all of these are going to be checked. I have yellow and like a kind of like a weird blue for my colors right there. Um, you don't have to have the fills on. This is what that does. It basically highlights London session in the form of, this, and you can have the colors on there if you want to. I prefer not to. Doesn't really matter. You can have the London low of the day box there, and it measures the low of the day, the high of the day, etc. The high of the day boxes are really not optional. I would highly recommend New York fill middle. Once again, that just does the New York session fill for the time, and you can change it to whatever color you want to. Let me see. If you want Asia to be filled, it's the same thing. Asian is green, London is yellow, and New York is purple. But like I said, you can color coordinate this as however you want to. And then London close, that's going to be the red one. It's like end of the session, right there. So with that being said, I'm gonna keep my settings how they are, but that's just an option. I will keep the session actual like kind of windows up right here on mine as well, just to kind of show you. So actually, that's fine. Normally I don't like the little kind of blanket right here. But it's really important. Like, this is Great British Pound USD, so you can trade this any one of these two sessions, right? You can trade this during London session since it's a UK dominant pair between 1 and 5, or you might be able to catch a setup between 7 and 10 if you were not able to catch between 1 and 5, right? So Great British Pound USD, since it is dominant Great British Pound, right? That's being the dominant pair, you're comparing the economy of the Great British Pound versus the economy of the USD, and that's fundamentals, right? If the US has inflation going up and all kinds of things like that, then and the Great British Pound is doing well, then the Great British Pound is going versus the US dollar is going to be buying, right? The US dollar is doing bad, the Great British Pound is doing well, causing the currency to go up. Drop one in the chat box if you get that. So that's just kind of like a intro to how to think about fundamentals. You're comparing the economies of the two respective currencies that they belong to. And like I said, I'll show you when we get into that probably next week. I'll show you what fundamentals to consider, what reports come out, and what they mean and everything. And we'll spend a few weeks on that. And that essentially will be the end because of this here, the last mile, because you guys have caught on well enough that you guys can actually just go out there and trade now. So Great British Pound USD currently is pending. It's overall bearish, but there is US news coming out. If I remember, it's non-farm payroll. And no, it's some jobs data, if I remember right. Yeah, the non-farm payroll. And that's going to determine basically the job market here, which is a really big driver of economies, right? You have inflation, and the job market being one of those. There are a few reports that come out that measure the job market. You have non-farm payroll, which is basically people who are on unemployment insurance. You have the actual jobs report, et cetera, et cetera. That comes out for how many people are actually employed versus unemployed. Those are all going to be high impact drivers for the US dollar in pretty much any state, right? Or any country. I'm a state, that's funny. Any country. So just to kind of like get you guys a very small intro to not economics, but because you're not an economist, you're a trader, but you do have to be able to analyze the economies in order to get the fundamentals on your direction, on your in your favor. So far this month, I've done 21.5% with another 7% pending right now. So that'd be 28.5% in March, in the single chat alone, just trading fundamentals and my strategy. So combined with fundamentals is very powerful. So time and price, just to I just wanted to get you guys an intro to that and kind of how that works, a general how that works, right? So you can trade this between 2 and 5. Do not ever trade Asian session. Always trade New York or London. Asian session is not advised. You have low liquidity and a higher chance of manipulation. The green session here is essentially essentially a manipulation session. Do not trade that, right? But then you have New York Open, right? And I'm going to lay out a few rules as to when these kill zones would be valid, right? In terms of when you are actually taking trades, right? They're not valid if you're short and you have a kill zone way down here. Let me show you. If you're short and your kill zone's way down here, obviously these kill zones are like 9 times out of 10 not going to hold up, because what has to happen right now, price is in a discount. Price has to come back up to a premium. So if you would have sold here just trying to basically rely 100% on the indicator, right, instead of just using it as confluence, you would have gotten stopped out, because one, you are selling in a discount, which is a no-no, instead of selling in a premium like you could have done here. Drop in the chat box if you see that and you get that. Don't get too caught up in the kill zones. They're just confluence, right? You can even draw out the times yourself if you want to, right? You don't have to have this, but it's just more difficult to, if you look at the bottom here, go, 2 to 5, and you can draw a little box right here yourself over the price action. But why do that when this does it for you? So obviously, like right here, yeah, it's sometimes it's better in that way. If you know you're in if you're short, if you know you're in premium territory, like right here, for example, and you have your kill zones and everything, you've already done all your analysis. I always turn on my kill zones last, right? So I have for this one, this would obviously be confluence to the downside from this order block right here on the 1H. We're gonna just pretend we're gonna be using the 1H as a higher time frame reference to get into the 5-minute. And if I see either this is in broke structure to the downside right here. Let me zoom in just a bit more. It broke structure to the downside right here, taking some sell side, and that's after I still didn't break this one either. So that's deep in premium territory up here relative to this big impulse move. Did not break this high, broke down, came back up, etc. Right? So, oh, nice. That's a good call though. That's a very good call. So, with that being said, for your kill zones are only valid for shorts when you're looking to go short, when you have the other confluences in there with you. You have, for example, here, price was in premium territory, and then it tanked. If you would have waited for buy side to be taken out and then turned on your kill zones, you would have had a 1H kill zone after Asian, London Open, which happened at midnight, which is right here. This candle right here is London Open, right? Price traded above London Open, which is supposed to do actually, and then ended up dropping, right? The kill zone was established. Let me take off this real quick. Let's see. Was that the one? No, it was the fills that I was trying to take off real quick. Asia fill, just to show you guys, New York fill, London fill. Can you get it out of here? Thank you. So the London kill zone happened right here, and you can see if I zoom in, and we're gonna just delete this for just a moment here. You can see, right, the liquidity ended at the kill zone. Can you turn that down some, please? The liquidity ended in the kill zone right here, for London. It took the buy side right here. All liquidity was taken, and it was taken right at the kill zone. Drop it in the chat box if you get that. And that happened between 2 and 5. 2, well, it's technically 1 o'clock, but 2 and 5 is where the move happens. 1, there's 2, 3, 4, and 5. 5 o'clock was the end, and then you had New York Open happen right at 7 to 10. So you could have caught the London move right here, and if you didn't catch that, then you could have caught today's New York move on this fair value gap fill. Drop one in the chat box if you get that and see that. Now, I do believe that it will come up just maybe a bit more into premium territory and potentially hit this order block, since it was responsible for this major sell side take. But for now, it's doing the fair value gap. You could have caught a potential intraday move starting here. The 15-minute did start to break down a little bit in reference to that fair value gap fill. That's what made me think that this area was going to be a thing, right? We're gonna turn that down. So with that being said, if I drew my premium discount fib right here, the fair value gap, technically the top half of it was in premium territory, and it did poke above the equilibrium right here. into the fair value gap and respected the kill zones, but to play it safe, I did not take this trade today. Ravens pound Swiss franc real quick. This is a trade that I did take today. It's the same thing. It has to be TP smash. TP smashed. Actually, my bad. It's the wrong vendor. Almost TP smash. That was my personal trade for my personal account. This is in the signals group. So this is for 7% right here for a 1 to 7, and I had them enter on the 1H. And it's the same thing, right? You had displacement here on this big impulse move right here, higher or lower and then higher. Price broke down again, filling this for a value gap right here relative to this structure break. But if you pay attention, this is a great British pound Swiss franc. Look at what time the actual move happened, right? You had between 1 and 3, you had New York, London overnight. London liquidity was taken to the upside and that lines up with the displacement in order to fall to fill this fair value gap. And that happened in between. Sorry about that, guys. Give me one moment. And that happened in between. That happened in between 7 and 10, really. The actual move happened, but you can see how it respected the kill zone, and it only respected the kill zone was because this was in premium territory in that regard. So if I'm drawing from the latest impulse move at the time, this is in premium territory, technically speaking. Drop a 1 in the chat box if you see that. Perfect. So you have to use the kill zones if you want to. It's extra confluence. I have it on my chart for when I am short and when I am in premium or discount territory. It's the same thing, except for the kill zones are going to be at the bottom here. And a couple things that you do notice is that you have, whenever you have price actually taking off in this direction, you have London. Typically, you will have London liquidity set up for a New York manipulation and continuation on 99.9% of pairs. That's why I like to trade New York session. In terms of these kill zones, once you actually have a trade going, you have displacement and all that, and you open up your kill zone and it's respected on, like, let's just say the 1H, and you want to enter on the 5-minute, and you can see how this reflects to the 15-minute and 5-minute and everything, right? Drop on the chat box if you see that, how it reflects. It did not take out that kill zone. But like I said, this is only valid when you have premium and discount territory and valid order blocks paired with the kill zone. It creates such a great amount of extra confluence that is insane. So I personally use kill zones for that. I use kill zones for this trade. The fact that it was in premium territory, and basically, essentially, what I did was I watched this displacement happen. This was the recent short-term high that got taken, and once I had all of that, I'm zooming out. Don't know what that was. Let me go to the daily real quick to show you guys the higher time frame reference right here. The higher time frame reference is that the daily time frame was basically in very respect this order block and have a continuation, and that they're still on the daily pushing this sell stops down here because they're not going to stop at just right here. They're going to have continuation. Plus, Great British Pound Swiss franc had bearish predicted candles today, and the actual fundamentals lined up with that because obviously the Great British Pound is going to do being far worse than the Swiss franc right now in terms of inflation and everything. They're going through all kinds of stuff over there. So drop one in the chat box if you do get the whole kill zone thing. It has to be in confluence with discount premium territory, displacement, all of that, right? You can't just be like, well, there's a kill zone here. It traded above a recent swing high. I'm going to sell this. You will get tapped out so many times. You have to wait for all of your confirmations when it comes to this. I know because when I first started using kill zones, when I first started using this style of trading, I oftentimes would get stopped out because I relied too much on the kill zone. Once I thought that, like, basically the kill zone was like a Bible. And I didn't even realize that I was thinking that way until I realized, like, every time I got stopped out, it was not in discount territory when I was buying, and it was not in premium territory. So that brought me to the conclusion that these kill zones, they're very true because you can see the moves that have happened when they were in premium territory. Premium territory, drop. Premium territory, kill zone respected, drop. Vice versa. But they have to be and have more confluence. It can't just be the kill zone, right? So make sure you're using that, right? You can, like I said, you can use one of the two, one of the few if you want to. They're both, I would give them both an A on there, how well they work. There is no repainting, which means on this indicator, which means the indicator does not go off of old data. It only goes off current new data and the rules of the strategies and how the algorithm actually works. Okay, Asian range is between 7 and I would say like 11, 7 and 11, because midnight open happens at midnight. So between 7 and 11, or you can do 11:59. I like to kind of keep it as a solid hour. So between 7 and 11, you have Asian range, right? Let's just do 7 p.m. to 11, right? In terms of Asian range, let me find Asian range and just put it on here real quick. Asian range is the same thing. I just had this on here. That's pretty much it for the kill zone lesson. I just wanted to give you guys some rules behind it. You know what I mean? You can't just rely on the kill zone. It has to be have those confluences with it as well, right? So I'm gonna rely on the kill zone if I'm selling, if it's in premium territory, if I just traded above a short term high, if I have displacement, all of that, you know what I mean, along with the kill zone. And then in this case, you had all of that, and you had Asian highs taken right here. Drop one in the chat box if you can see that. That's like the little red bendy thingy right there. And you can change this to reflect a background and not plot that if you wanted to. Actually, no, that didn't work. Okay, let me delete this. Didn't work like I thought it was going to. Give me one moment. The background is going to be, let's just say like blue or something like that. Oh, it's not going to let me? It's really not going to let me. That's crazy. Oh, the opacity's at 0%. Let's go 50. That's why. That would make sense. So you don't have to have the little bendy things. You can literally just have a background if you want to. I prefer it. It's really up to you. It kind of makes it like a weird box, but as long as you know that when it trades above the blue or whatever color you choose, that it is going to be taking out those Asian highs, right? You can use Asian session in confluence with everything that I've taught you. It's just an optional indicator for more confluence like the rest. So Asian session happens in between 7 and 10. So let's look here. So this is 6 p.m. Eastern time, and this is all basically this is all the times I mentioned in are EST. That's why I have mine in UTC 5 New York time, because when I trade, it has to be EST. So this is specifically EST time. So Asian happened here, 6 p.m. Start to track it. Price push 8, 9, 10. At about midnight, Asian session is done. You can see that candle right there. Drop it on the tab box if you get that. That's called London Open, right? At midnight, exactly midnight Eastern time, London Open is a thing. So that would be this candle right here would be London Open. Typically, what I do is because the algorithm trades above is going to trade above or below London Open. You can see the London Open right here. Price is going to trade above or below London Open depending on your directional bias, right? If you're in premium territory for long, discount territories for shorts, my bad. Premium territories for shorts, discount territory for longs. If you're long, you do want London Open to be traded below, and then price would usually trade below it, taking liquidity into some type of footprint for a continuation. If you're short, London high will be taken, which in this case is the high of this candle. Price did trade above that, and also in confluence with the Asian session. Don't forget, and the kill zone. Don't forget. I can take this off and just put the kill zone back for an example. And in confluence with this is the same thing. I just did this for example purposes, but this is New York, or this is London, this is New York, and in confluence with the kill zone right here. So you had Asian highs taken, you had London Open traded above, you had a kill zone, you had price in premium territory relative to the last structure break, you had a recent short-term high taken out. Just a bunch of stuff happening here for the short. Drop one in the chat box if you get literally all of the confluence here relative to this drop here. And technically speaking, let me turn off these indicators real quick. Technically speaking, you had displacement right here. You had a short-term low taken out, and they took out the short-term high. So this is small displacement right here. Drop it in the chat box if you see that. You had displacement higher here, and then when they took out this low, that's the displacement lower. So you had that confluence as well with this trade. Pretty easy, right? Even the shorter, as long as it's a swing high and a swing low, if it's taken out and liquidity is taken out on both sides of the market, that's displacement. You need to consider that and go from there. So this was a pretty easy trade. I could have entered on the 15-minute, but I wanted to purposely enter on the 1-8 so it would be able to run and not get stopped out by like margin or something like that or spread. And yeah, I do expect price to potentially come back up, take out the short-term high into the fair value gap if it is going to, when it does retrace, because we did just get done taking out major sell side on this big impulse move up. But so maybe another entry there overnight during London. After this, I'll watch this area and then get in on the 1H again. And then if there's enough volatility between maybe like 2 o'clock in the morning and like basically the end of the day tomorrow, I might be able to smash out an additional 14% on this pair, depending on volatility. So to end the week, really. So drop in the chat box if the kill zones made sense and the confluence that I just explained for this trade that I actually took today and called in the chat made sense as to why I took this trade, right? And technically, you had displacement here as well. You had the big impulse move. You had swing high right here, displacement higher. Actually, my bad, displacement lower, displacement higher, continuation, because you got done taking major buy side right here. And then fair value gap fill here, continuation. It hasn't even came back up to take out the short-term high and fill this fair value gap. And they're going to have to eventually. So that's pretty much that. That's the lesson for the day. That's how you use kill zones. And the reason why you have the kill zones is because you want to have something that you can measure with time. Measure the time that you need to be trading. So if you're trading USD pairs or you're eyeing a USD pair, I recommend trading between 7 and 10 a.m., 7 and 11 a.m. If it gets to be 11:30, I would say, don't, if you're not in a trade, then don't, it's a no trade day if you're not in a trade, because noon is a manipulation block, an order block that specifically the algo uses to manipulate at noon, and there's typically a 1:30 algo push as well. So you can trade all the way to about 3:30 at the latest. And algo pushes happen on every pair, but they especially happen on the pairs that respect our strategy the most. That's any Forex pair, and there's a few indices, right? You have SPX 500, which is a very, very good pair to trade for small accounts, by the way. This pair respects our strategy an insane amount. As you can see how it's been moving. Liquidity takes, all of that. SPX 500 respects our strategy. I was trying to get into this earlier for a 1 p.m. push, but I never got the retracement that I wanted into this order block right here. For perspective, I use the 1H for a higher time frame reference, and this is obviously in premium territory right here relative to this daily right here, fair value gap, right? So I went from daily down to the hourly, down to the 15-minute to fine tune this. But like I said, I never got the price action that I wanted. So these pairs do hold more volatility than Forex pairs, and that's why I do like them, because you actually get trades and they happen fast. And this happened at noon. This is at noon. Just look how much volatility, 1 p.m., 2 p.m. This pushed all the way to 3 p.m. You could have held this until 3 p.m. and had TP smash with actually a lot of momentum. Drop one in the chat box if you can see that. So SPX 500, NAS 100 USD. Same thing. Big drop. US 30 respects our strategy a lot as well. If you get in the same thing. So if you notice something, right? SPX, US 30, and NAS 100 USD all mirror the exact same move. Drop one in the chat box if you can see that. Literally the exact same setup. Like if I did my markups right here, let me see, indices metals. Let's go to indices and metals. As SPX, there's NAS, and the green is always going to be daily fair value gap. The green kind of like trend lines are going to be daily fair value gap. And then you had obviously the and this is 1H time frame. You had the NAS, the US 30. So little trick, the algorithm, right, pushes these pairs down at the same time. They are in sync most of the time. The only two pairs that differ sometimes is NAS 100 and SPX. Sometimes when NAS 100 is going down, SPX will be going up, and vice versa. But majority of the time, the moves mirror each other. You'll see almost the exact same candles formed in the exact same way printed. There might be some slight differences, but not too much. So if you do end up trading any of these pairs, if you're right on one, there's a very high chance that you'll be right on all of them. If you execute the strategy, you're getting confirmations on one. Look at this fair value gap fill right here. Technically speaking, or actually no, order block tap. Is that an order block tap or fair value gap fill? So I validated that order block. I traded above the Bush candle, so it's not valid. Technically speaking, we did have this last up candle, 2 up candles before the drop being respected right here. So that would be the order block. It traded above this as Actually, no, I did not trade above this. So I just respected this order block right here relative to the impulse move, and then made its way down after trading above a short-term high right here. So if you do trade those pairs, it is really good to just take a peek at the other ones too, and see if you can be 2 for 2 or 3 for 3 very easily. Nasdaq, you do need a bigger account, but SPX is really good for small accounts, right? So with that being said, drop one in the chat box if you got some nuggets and value out of this. And you're going to essentially use this to be able to see how far I can go back. Because if I can get my indicator how I liked it, how I had it the first time, be super great. Almost there. Yeah, I get it. Nope, that's about as far back as it's gonna let me go. All right, that's fine. So that's pretty much the lesson, and then you can also pair this with high of the day, low of the day, right? Look at right here, right? And high of the day was what right here happened between what New York and the my bad London and the end of New York. Now we're in Asian session right here, so I'm not trading anything anymore. But the high of the day happened at the end of the day right here, and you could have taken this down. And then the low of the day at the time obviously was right here. Drop one in the chat box if you get that. Because the Asian session doesn't count, and the green line would be Asian session. So this is not the low of the day. The actual low of the day during the actual volatile sessions was right here. So you have the low of the day, you have the high of the day, you have the displacement, you have your value gap, premium territory, as you see measured here. You have kill zone confluence, you have all kinds of crazy confluence that you can take advantage of and confidently execute your trades now, right? So you have a few things at your disposal. You can or cannot use this. This is just what I use for the high of the day, the low of the day. It helps narrow down areas and filter liquidity and all that kinds of stuff. So it really gives you insight on like where price is stopping and starting along with everything else so that you can make good decisions when it comes to the market. If you wanted to take this on a 15-minute, you could have for probably like a 1 to 3 right here if you would have had a tighter stop loss. Typically, I'll put my stop losses behind the kill zones because once again, once they're respected and the kill zones actually established, right? You do have to wait for them to be established. If the kill zone is still being created, then you need to wait because that's the kill zone. If it hasn't been established, you are subject to manipulation if you try to enter too early. I wait for the kill zone to be actually established, and once the kill zone is established, then I handle business as price action starts to fall. Oh, terrible. That's fine. 2 to 5, 7 to 10. I don't like 8. So this is why I like Bryce KZ boxes. It's the same thing because they only have New York and London. I don't want the daily high or low on. But as you can see, if you do have the daily high and low on, it is respected. This was the actual daily high. And of course, to this indicator, it works pretty well. I can't remember what the settings were for this, but we're about to see. I think it was literally all of these were checked. And then the fill box here. I could just have I could do the fill box. That's fine. Sorry, I think I get this together. So that's pretty much it for the lesson, guys. I know at the bottom. That's pretty much it for the lesson, guys. I'm gonna turn this one off. That's pretty much it for the lesson. If you got value out of this, like I said, let me know. Let me know if there's anything I can improve on because your feedback means I get better. So if you have any comments about how I teach, and maybe it doesn't resonate with you or something like that, let me know and I can adapt my teaching style to your learning style so that you guys can learn a bit better, if that's what's needed. So you guys have any questions for me? Yeah, man. Okay, perfect. So yeah, just repeat that every day until you've compounded your account. And we're still have like a few weeks of fundamental learning to do, like just on fundamentals so that you can make your trades even stronger. Because if you know, Great British Pound's inflation is terrible compared to the Swiss franc. You know what I mean? Swiss franc practically has no inflation. They have a completely self-sustaining economy. And when times are bad in the world, they just don't fold. There's just nothing else to it. Their economy doesn't. It doesn't even flinch or even barely get hit. So it's it's really good to know fundamentals because it's practically required. The people who just trade technicals lose long term. So you have to learn how to do fundamentals paired with that too. And I'll give you guys some resources that you can use too that are free too. So if there's no more questions, I will see you guys in the next live, and essentially basically let this soak in, let everything soak in, and essentially take everything that I've taught you so far in terms of the technical aspect and how the algorithm works, and put together trades that are going to be high confluence, high context trades according to what I've taught you. And you should be able to execute these trades blindly so long as the confirmations have been met, right? Once the confirmations have been met, the only thing that you need to do once you are seeing all the things happen is execute. The most that you can be is wrong, and it's a learning opportunity. So don't be afraid to execute trades, which neither one of you have been, but just saying, like, I know in the back, your brain can get the best of you. So like at the end of the day, it's you against your brain. Trading is 99%, I would say 90% mental and 10% technical. The technical stuff, as long as there's somebody to teach you, is not hard. It's the mental stuff battle in your head while you're trading, and you know what I mean, that gets to you. So make sure that you're focusing now at this point less on the technical skills and more on the mental skills, right? And if you haven't, I recommend this book for improving your mental. Trading Psychology by the Divergent Trader. So this is the book that I recommend, that I personally have, and it helped my psychology tons. It's like $20 or something like that, and it easily is the best trading book out there. You want to become stone cold in the market? Listen to Alan Edward right here, and this guy is a 7-figure trader, so he knows what he's talking about. So, perfect. Yeah, it's a great book. If you haven't got it, I highly recommend it. No affiliate commission, no links. Just go look up the Diversion Trader on Instagram and find his link in his bio and go buy his book. It's gold. But you need to be focused on applying the strategy according to everything I taught you, and then really sharpening your mind at this point, because when you start handling bigger money, you have to be in the state of mind and realize that it's the same thing. If I'm trading a $100,000 account, and I take a trade in this area, somebody today who only had a $50 account took this same trade and was positive on it. The only difference between me and him, and he might even trade the same style as me, because this is a very popular style to trade, right? It's a little different than everybody else's because I have my own spin on it, but he might have taken the same trade as me, or it's very likely, because Forex is worldwide, even in Africa, right? We have some very rich African Forex traders, and he made probably only like 15, $20, right? It's not the amount that you made, right? It's about the fact that the trade execution, process of analysis, and process of entry is still the same. And the only thing that changes is your lot size. Too many people let the actual money amount floating, whether it's negative or positive, get to their head. It doesn't matter. As long as you're risking 1%, you shouldn't have anything to worry about. Of course, if you're risking 50% of $100,000 on one trade, you're going to be nervous. But you know what I mean? Make sure you're sharpening your mental. It's the most important thing, and I wish I would have done it earlier in my trading career, but I was too focused on the technical side. So you have to make sure that you're having your brain, your psychology is good. Yeah, facts. So I'll see you guys in the next live. Post your trading results during the week. Let me know if you have any questions about anything. If you're confused about why you got stopped out of something, we can reanalyze a pair, and I can show you why you got stopped out of that pair, and you can use it as a learning experience. So don't be afraid to do that as well. If you get tapped out, I would love to review your losses so that we can figure out why you lost, and you can be like, oh, okay, I see now why I lost, and you might see a common theme of why, past times that you got tapped out, and then be able to fix that yourself because you realize something about, we realize something together about your trading. So I'll see you guys in the next live. No problem. Remember, most of the time when you get tapped out, it's almost always human error.